Hello everybody, welcome to Bitcoin Not Crypto. My name is Forrest Stevens. In today's episode, I'm going to be talking about whether it suits you better to own shares of MicroStrategy, call options, or the other derivative options, MSTU, MSTX, and MSTY. But before I get into that, if you believe in MicroStrategy, you should believe in Bitcoin. And the real benefit of Bitcoin, I mean, there's many, but one of them is that you can own it yourself. You can actually hold and be a bearer of Bitcoin. And the best way to do that, in my opinion, is through the Bitcoin Well, which allows you to buy Bitcoin and they transfer it directly to your wallet. They never hold it on their platform, which reduces the third-party risk for you. They have the lowest spreads. They're available in Canada and the US, and they have non-KYC options. So check them out. There's a link in the description that actually gets you some free bonus points, which gives you free Bitcoin, and it helps support this show. So thanks everybody for that. Now let's get into this. So shares of MicroStrategy, in my opinion, are the safer of all of these different options that we're going to be talking about. Obviously, it's an extremely volatile stock. Maybe it doesn't even fit in your portfolio because of that volatility. However, we have seen, if we look into the history of MicroStrategy, that volatility is skewed to the upside. So that means that historically it's done really well. Now, with that, there's these huge drawdowns as well. There happens every once in a while a big down day of MicroStrategy. Now, what can happen when you veer out of shares is those down days in MicroStrategy can affect you a lot more. So MSTX and MSTU, they are basically the same thing. I'm not sure exactly how they're built, but they expose you to 2 times leverage of MicroStrategy, and they're an ETF, and they would do this through derivatives of some sort, which means options. They would hold options or swaps or agreements, and they would basically expose you to that 2 times of MicroStrategy's volatility and price action. And this is a daily rebalancing type ETF. So at the end of the day, it tries to track MicroStrategy's movements within the day, and then it rebalances every single day. So they're quite extensive on the fabrication of them, and therefore they're also expensive. So they have an expense ratio to them, which is something to consider, whether that's something you want to pay for that 2 times leverage exposure. The other thing too is with these leveraged funds, this goes for any leveraged fund. If you make a 10% gain and then you have a 10% loss, that 10% loss after the 10% gain is actually more than the 10% upside, because it includes it starts at that higher price. So 10% up, 10% down, they're not equal. And therefore, with these leveraged funds, you get more downside with them. And that sort of begins to decay and give you, over a long period of time, less percentage, basically, upside than the 2% that it's aiming for. And therefore, it's a lot of people advise not to hold these long term, and that these are basically daily trading instruments. So if you believe there's some sort of catalyst and you want to trade it and you want to be leveraged to that trade, then this would be something that you could do in a short term. And basically, the longer you hold it, the more exposure to downside that you have. And I mean, it would still do good long term if the price continues to go up and even still has those drawdowns, but you're exposing yourself to more of basically the negativity of those drawdowns for your percentage gains. So the other option here is, before we get into options, is MSTY, which is a covered call strategy. So what that means is they hold spot, they hold the shares of MicroStrategy, and they sell call options. And a call option is a contract that allows the person that buys the contract to, based on certain criteria, gain ownership of those shares. And because of that, they're paying a premium, or they're paying a price for that contract itself. Now, these call options, they are out of the money, which means that they are going to be at a strike price. Actually, I'm not entirely sure where MSTY sells their call options. Some of these funds do it at the money, and they just expose you to more premium, because the way that options are designed, and I'll get into this on the options side as well, I might reiterate it again. The value of an option is based on a few things, but one of them is the underlying share price, the underlying share volatility, and the distance of how close the option is to expiring in the money. So further out of the money, that option becomes cheaper. Closer to the money, or in the money even, that option becomes more expensive, because it's more likely that it'll expire in the money when it expires. And that's the other thing that really dictates the price of an option, is how far away the date of expiry is. So the further away the expiry date is, the more valuable the option as well. So if MSTY is doing a strategy of maybe 10% out of the money, say MicroStrategy, or the underlying stock is trading at $100, then they have a strike price, or an option expiry amount at $110. That's 10% out, and say they do it for a month out. So in a month after issuing that option expires. Now, they get paid right away, and if that underlying equity does not go to $110, then it's not in the interest of the option holder to exercise that. So those shares do not get taken away, and in fact, that option expires worthless. So the option seller, the covered call seller, gets to keep their shares, and they get to keep that premium that they got right away when they sold that option. So that's how selling covered calls works in its bare minimum. I'm not exactly sure the strategy that MSTY does. A lot of people sell covered calls. In fact, I've sold covered calls just myself. I've owned covered call strategy ETFs, and you pay a little bit of the expense ratio, and you give the power over to whatever their strategy is. Sometimes they're a flexible strategy, and they kind of look at the markets and dictate what is best for either acquiring premium or not getting shares assigned, making those options expire worthless. Sometimes they're just very strategy oriented, and they tell you very upfront. I'm not sure with MSTY, that might be something to look into if that is a strategy that's interesting for you. Now, historically, they've been able to pay, I think, 136% through these option premiums, which is really crazy. However, MSTY, even including that 136% that they pay out through dividends monthly, has still underperformed just owning MicroStrategy stock, not even leveraged, just their stock, because of the crazy price appreciation that they have. So MSTY, it basically caps your upside, because they're selling that option, and sometimes they're going to expire in the money, and they pay you kind of that monthly income generating thing. So it's more for a holder that wants to generate some income right away, wants to do it passively, doesn't want to sell covered calls themselves on the underlying, and is okay with not making a total return that is as high as the underlying stock. There are some covered call strategies that could actually outperform holding the underlying. I've personally done that just by being very smart and very safe about selling these options way out of the money, and kind of doing it in a very strategic way. However, that is fairly difficult, and the rewards you get are going to be much smaller. Like the percentage that you're able to use as income from selling options is going to be a lot less than if you're just allowing these to get called in the money, and you're you're underperforming the total return that you would get from holding the underlying. So there's a few different options of what you could hold to get exposure to MicroStrategy: underlying, leveraged ETF, and a covered call ETF that is geared towards income. The other thing you could do is this is all for longing, right? You could buy options. You could buy call options. Now, I've explained call options with MSTY, but if you were to, instead of sell covered calls or be exposed to a fund that sells covered calls, if you wanted to be the buyer of covered calls, why would you want to do that? So the reason you would want to do that is because you want leveraged exposure to MicroStrategy's share price increasing and their volatility increasing, and you believe you have a strategy that would perform well in a certain given amount of time. That's the other thing when you buy options, is you have to buy options with an expiry date, and you have to think that the price is going to appreciate enough that you can either exercise that call option in the money, or you could sell that call option within the period of you owning it and before it expires at a profit. Now, with options, because of that expiry date, there's something called theta decay. And you could learn all about the Greeks, gamma, delta, theta, and others. However, theta is just to simply sum it up, is basically every single day, because you get closer to that expiry, there's a certain amount of decay to the value of that option. If your option is really long dated, that decay is really minimal. But the closer it gets to expiry, that decay speeds up, because you're much more limited to the volatility and the upside that you need to either become in the money or to increase the value of that option, because it is going to expire really quickly. So long dated options act a lot more like the share price, and in that way are safer than short dated options. But options, people also use them as a hedging instrument, but I'm basically talking about the way of using them as an amplifier for a bet, right? You are betting that the price will appreciate within a given certain amount of time, and you can also bet, depending on the strike price, of how high you think that value is going to go. Now, to make money from options, you don't actually ever have to get in the money, right? Like, you could buy, for instance, I own an option on MicroStrategy for the 5:30 call, and this was the furthest out of the money that I could buy for these date of expiry of these options, and now it's 990, I believe. So that just goes to show how much MicroStrategy has appreciated, and how much the market makers are pushing out the long side, the out of the money side of these call options, because they keep coming into the money, and all the ones basically before 5:30, or well, not quite all of them, but a lot of them have become in the money. So they're pushing out the date of these options. And so I had a bet basically that, okay, so even still, right, this option that I hold is not in the money, but because it's a leap, it expires July 2026, I believe. Because there's still so much time, there's like 500 days or something like that. Maybe it's 27, actually. I can't remember. There's about 500 and somewhat days until this option expires. So there's a long period of time that the price could go up and it could get in the money. So there's a lot of value because of the amount of time that can still happen, and there's still so much that can happen to MicroStrategy's underlying stock. And because it has gotten so much closer to being in the money and worth something to a holder who wants to exercise it, that it has gone up in value drastically compared to the shares of MicroStrategy that I hold. The shares of MicroStrategy that I hold are 60% up. The option that I'm telling you about is up 350%. So these gains are elevated, and that's the leverage that comes in because an option, I should have explained this much earlier, but an option, one option contract is basically connected to 100 shares. So an option might be $1, right? But that's $1 per share, and you need to times that by 100. So if you're buying $1 option, you're actually going to have to pay $100 because you're buying per share, and each contract is for 100 shares. So that's something to consider. Now, these options on MicroStrategy, they're expensive, and that's because of the underlying share price's volatility. And that is what creates a lot of the value of these options, because there's a lot of chance, there's a lot of opportunity with that volatility for these options to become in the money. So I really think, and of course this is not financial advice, I'm just kind of explaining how any of these things work as best I can in my own words. But I think that for the vast majority of people that want to play MicroStrategy, shares are going to be your safest bet because they're not subjected to theta decay, and they're not as complicated. You don't have to understand, okay, well, what is the strike price that I think it could get to, or what am I willing to sell at? What percentage gain am I willing to sell at? When will the leverage sort of start to wear off? Because as it becomes more in the money, it starts acting more like shares as well. So do I need to roll it for another out of the money call? This is something that a lot of people in MicroStrategy irresponsibly long are doing, is they buy the furthest out of the money, then those things get closer to in the money, and they roll them and buy even further out of the money ones that were just created. So there's a lot more you have to know to trade options. There's a lot more risk, and especially there's a lot of risk when you don't know what you're doing. And from watching this video, you have no idea what you're doing. If any of this is new to you, do not buy options. And of course, this is not financial advice, but this is just something that you have to consider. This is something you have to think about and learn about before it makes sense. You could, of course, just buy something randomly, buy something with the limited knowledge you have, and get totally lucky. And we are in a bull market. MicroStrategy is perfecting and implementing their strategy of buying more Bitcoin per share, and they're growing just rapidly at that metric. The MNAV argument makes no sense. There are people shorting. I mean, the last video I made, there's somebody shorting MicroStrategy off of the MNAV idea, and because of the price of MicroStrategy in the early 2000s .com bubble and how it collapsed from there, which is just hilarious. It's hilarious to compare MicroStrategy today to MicroStrategy in the .com bubble. It's hilarious how fundamentally different the world is, how fundamentally different MicroStrategy is, and to compare those is just, again, hilarious. So know what you're doing. Maybe these other ETFs that expose you to MicroStrategy in some way are the way to go for you. Maybe the shares, maybe none, maybe Bitcoin, right? That's personally what I do. Like, I have MicroStrategy and it's become a large part of my portfolio. But when I bought into it, it was a smaller percentage than it is now. And it was always meant to be smaller than my cold storage Bitcoin, which is, to me, the best performing asset. Not just, not because of the gains, the percentage gains, but because of the technology of what Bitcoin is and the future potential of what Bitcoin is. Remember, MicroStrategy is not an in-kind product where that Bitcoin per share, you're not owed that. You will never be allocated that. This is a fiat play, and maybe people can play it in a way of outperforming Bitcoin and then rolling that into Bitcoin. But the The thing that happens when you start making money is you start to become more and more risky. You start to think it's more and more of a sure thing. So timing, getting out of the market, doing a trade. How long can MicroStrategy do this? There are risks. There are risks to Bitcoin, and the risks to Bitcoin, to the price of Bitcoin, not Bitcoin itself, affect MicroStrategy. How will they affect MicroStrategy? Will they amplify, just as the gains of Bitcoin amplify the gains of MicroStrategy? I'm getting these mixed up. Or will MicroStrategy outperform Bitcoin in a bear market because of the strategy they're performing? These things are yet to be seen, and so it's just good to know about all of this stuff. It's good to think about this kind of stuff, and it's good to learn, especially if you're going to act. So that is what I'm trying to do here, is just teach you a little bit about options. Not only just calls and puts, but the different options you have to get exposure to MicroStrategy. So if anything here has been unclear, I appreciate a comment that would give me a question to answer. I can answer that in the comment section itself or in another video. Also, I have a Discord that is open that you can join, and you can actually book a one-on-one free 15-minute call with me if you have any personal questions about MicroStrategy, Bitcoin Well, whatever have you. And there's a whole group on there that's forming. People have asked about multi-sig, all MicroStrategy, all these different things. There's answers in these different channels that I've built on this Discord, and it's forming a community. So go ahead and join that and check out Bitcoin Well, and any other sponsors that I get in the future, I will put in the description as well. So thanks everybody for watching, and we'll see you on the next video.